My name is Derek Demore with Futures Demore and Futures Networks Live. We are price action traders, and because of that, we really like to determine what the trend or the overall direction of the market is. Specifically, we use what's called an exponential moving average, or an EMA, to help us with determining that trend. Today, we're going to look at a very specific type of trade to help us become more profitable and successful traders. That is, we are looking at the 200 period moving average in this salmon color and the 50 period moving average in this Dodger blue color. Now, there is a lot on the web about moving averages. I specifically chose this one site because it's nice on Raging Bull. The moving average collects the closing price of a specific stock over a period of time, usually over a couple of days, and then averages the price and plots it on a line chart. There are three different types: the SMA, the EMA, and the WMA. We typically use the exponential moving average, which is more weighted toward the most recent price. So that's pretty much all you need to know. There's much more on the web if you want to go over that later. At Futures Networks Live, we used 4 different EMAs: the 21 period, the 89 period, the 50, and the 200. The 21 and the 89 are close to the 20 and the 90, which many use, but we like to use Fibonacci numbers just to be different, and we love Fibonacci. So what we're going to talk about specifically today is what's called a golden cross and a death cross to help you become a more profitable trader. Now, typically, you want to trade with the trend, meaning whatever period you're using, say the 200 in this case, when the price action, we use candlesticks mainly, is above the EMA, you'll want to go long or up with when it's above the EMA. Conversely, when the price action is below, you will want to trade below that price action. That typically allows you to be a much more profitable trader. So we're looking for a signal, which one is the golden cross, when the 50 period moving average, in this case, we're on a 5-minute chart on the MES. When the 50 period crosses from below or underneath through the 200 above, that's called a golden cross. And that's typically a good time to go longer. And when you get a death cross where you're above the longer term EMA, in this case, the 50 is coming from above and crossing the 200, that is called a death cross. And you typically would want to go in the direction of that price action. Now, what's interesting about this is because the EMA it uses the data previous, it doesn't always predict future, but so as it's coming up to it is usually when you want to get in. In this situation, as you can see here, by the time it crossed, it was pretty much at the peak. So the angle of ascent was showing that the minute that it's about to cross the longer term one was a good time to get in and then take it long. A lot of times it is still a good time to get in when it crosses to go in the direction, and there's a lot of more price action in the direction of the cross. Same with this situation. And that's why I gave 2 different examples to show that here you can have price action continue way down. It's just a matter of going and testing this over many attempts and seeing which is the best for you that works to help you become a more profitable trader. With AI or artificial intelligence, a lot of the algorithms use this specific 50 and 200 with all different periods to help accomplish more profitable trading. I think it works best in longer term, meaning on a daily chart or an hourly, and sometimes we use the 4-hour. So look this over, practice with it. and see if just trading with the trend, with the 200 period works, or if you might want to use this death and golden cross as a way to become a more profitable trader. Thank you for listening. My name again is Derek Demore with Futures Demore and Futures Networks Live. Have a great day.